It's the aftermarket hours, and it is Monday, the 6th of April. Just a quick wrap up. Reminder that our notes, we put them out for anybody that wants to take a peek, free videos and charts. And if you click on the links, obviously it will bring you up to either one of our charts or perhaps some text that we had posted, but something to substantiate the ideas that we were thinking at that present time. A reminder that markets change on a dime, and you need to understand that you have to react, and that's part of the game. It's not just about your action plans, but how do you react when things don't go as you had previously expected. So let's talk a couple of minutes about today's trading. We had called 38 support. Make sure you're paid by 38 on Friday with the abbreviated session. And thought was that would be support for a bounce, a DCB, we call it dead cat bounce. And once we start down that road, no idea how far the bounce will go, but we have certain ideas once certain boundaries are crossed. We had already thought that the morning after trend may be tempered by the extreme. As it turned out, today's extreme was far more egregious than that was. 46 was our magnet, 46 to 47. Realistically, that was where we thought, according to the Murray math system, that should be a flipper. And if we take out that 46 to 47, then logical targets became the 49 to 52 zone. And once above 52s to 53, then we thought the market could run to any high, although that certainly does not translate into meaning the extreme high that we got today. A reminder that when we talk like this, it doesn't imply that we got every ounce out of every trade and that we never make mistakes or whatever. So certainly that's not what we're implying with these videos. Scene of the crime, 59.5, and for some of us that's a very important concept. We like to see the scene of the crime revisited. So we call the half gap at 54 as a logical potential target, and we treated the overnight range that range from Friday and overnight today as really the overnight range, with the idea of let's play towards that 54 and see what happens. And again, no guarantee that we're even going to get there, but once we do, then you have to start thinking differently. It was our insight, and that is posted all the way through the trade ideas that we kept posting. We eventually understood that 81 to 82 area was really the last significant high zone that the boys would want to perhaps try to test, and that became risk reward at the end of the day. And we did not expect a 25-point plunge at the end of the day or anything like that. We simply thought it would be a small rotation because there had not been any really south side, and if we were going to get it, it was going to be the afternoon trade, and that turned out to be the best short of the day. This is a 5-minute chart, and once we got rocketing rolling above that 47, primary first targets became that 48 to 52 zone, and if we took that out, then obviously the test of that 54 to 55, the year open, and the 59.5 actually was closing the gap. Once we come out strong, we have no idea whether it's going to keep going strong or roll over, but we do know that as long as we're above the green, the red, and the blue line, that the likelihood is that we are going up until proven otherwise. Late day, we had said anybody above 75, that was the real juice part, and we thought weekends above 75 needed to be careful about a late day pullback because we had none. There was no contra, and usually you'll get a contra. So once this reversed and we closed the gap at 59.5, our feeling was the market had reversed and 52 was support, and the trade should really be thought about upside drives. And step by step, once we got rocking and rolling back into that breakdown bar, we felt this 52 area again was the real flipper, and above that would then, and you could actually see a breakaway gap there too if you notice it on the 5-minute chart. And then the 59.5, we thought that obviously should be a flipper, and above that, anything goes into our next zone, the 62s to 65s. And then the measured moves really start to kick in into that 70 to 72, and by then it's just lights out. Anybody that's trying to short, really you have to just be patient, and there's no easy short trade. And it was more of a timing trade and a price trade where we thought that, okay, you better be careful into that 78 to 82 now, because it's the stop clock trade where guessers all day long 5 times were wrong, but they're going to be right once, and that was the right one. For those of you who have hung in there trying to learn a couple of ideas from us, here are a few pro tips that hopefully will enhance your game. And this is usually just reserve this for our members, but share a few ideas for those loyal followers who take the time to review this video. We have a violation rule, and we had a resistance zone that you had to get by at 52. And once that gets violated during IB, we turn that around and say, okay, that's got to be our key support now until broken. And so that immediately becomes our support pivot. And with the idea, if we do take out the IB high and keep on moving, that is still going to be the key on subsequent retests. And there were, like I said, there was a little gap there. You could see it, and I said, they're trying to drive and run shorts out of town. And at that time, we still had no idea where the eventual high would be, although 78 was our 78 and a quarter. So we knew coming into the 78 zone, you better be careful at the end of the day. 79 was also a previous demon from last week. So we thought better make sure you're paid coming in there. So this rule is one to try to remember. It's a very important rule for our methodology. And once we have a violation during that IB, that becomes immediate support. And for those of you who are trying to understand the meaning of symmetry trade, I'm going to show you an example. And again, this is for those of you who took the time to review this, giving you some inside tips that we use. A symmetry trade to me says, aha, there is an equidistant move. And once I see that, it tells me immediately to start to suspect that perhaps the primary trade is done and odds will shift towards the opposite direction. Let me show you what I mean. We had the overnight low at 38.75, and we had the symmetry trade go back to the 59.5 scene of the crime from Friday. So if we were to duplicate that range and put it on top of itself like an ABCD, and we would find that that would give us a high of 80. And that's why when we saw the 80 hit, I noted the symmetry middle, and I said that's our symmetry trade done, and probably better odds now coming back away from it. So this is the easy way to visualize this move stacked on top of itself, similar to what we showed you the other day in the crude oil. And this was the chart that I had posted on Twitter last week, showing the importance of perhaps this duplication method. And here's a classic example, yet again, within a point of that type of an idea. And again, risk reward up here at that 52 plus. So one of the things we look for are ideas like this that can be cloned over and over and used in anything. It doesn't have to be just for E-mini. We teach using the E-mini S&P, but we like to show these ideas and how they work in other vehicles as well. Again, this is E signing off for Marketwizardz and eminywizard.com. We don't have a crystal ball, but we do have a brain. We try to use it. We try to come up with common sense ideas, and we try to take the meat out of the moves. We try to take what we believe to be our normal risk and reward type trades. We don't carry over usually. Who wants to, carry over into Easter and worry about cutting short your Sunday dinner with family and that responsibility. Plenty of action during normal hours, and so we waited until this morning to make decisions and then call trades. Again, this is Z. Hope you had a good one today. Remember to use stops. Do not be stubborn. And some days, if your game is off, just accept it. Go sidelines. Live to fight another day. Take care.